Hello traders and welcome back to my channel. Today we're going to go through a simple example of a 3370 EMA cross. Probably two numbers you haven't heard of before when it comes to EMA crosses. And let me ask you a question. Are you tired of losing at trading? Are you tired of stressing out about every single pip and every trade, lacking confidence, system hopping, looking for the holy grail? Watch this video. It's like 2 minutes. I'm telling you, it could change your trading career. So this is the 1 hour chart. That's the sweet spot for the time frame on this strategy. And this is the Canadian dollar. So what we're looking for is a few things. One, right here, here's the EMA cross. Two, we're looking to buy the retrace back to the 33 EMA. And the best possible scenario is this trade here where price moves back to that line very quickly. It doesn't take 10, 12, 15 candles, 2 days. Because if that's the case, eventually the EMA is going to flatten out and that's no good. So we have a nice steep EMA. We get the quick retrace, boom, we're right back in. And that's it. It's just that simple. Okay, so I want you to put this onto your chart, the 33 and the 70 EMA, and then just go back in time and look at what happens. Here, if we go back here, here's one here. We get a cross here. This is what I'm talking about. Here's a cross here. Price comes up, and it takes a long time for it to eventually get back to the line. And you see the EMA is flat at this point, so we really wouldn't have a trade at that point. This is what we're looking for right here. We're looking for the cross, the quick retrace, boom, the buy, and we're out, just like that. You can put the stop loss below the 70, very tight stop loss, and that's it. So if you find this video helpful, please hit the like button, subscribe, put some comments down below. If you have any questions, I'd be happy to answer them for you. And until I see you again, trade safely and may the pips be with you.